Andy, I want to welcome in and good morning and thanks for joining us. The one thing that I look forward to every week, at least for the last month or so, is talking with you guys about what you're seeing on your fear index and coronavirus mentions, which is what we're going to be covering today. And it's because this is what's been moving markets. As much as we want to look at the fundamentals of what's going on with each one of these companies individually, it all starts here with this virus outbreak that's subsequently turned into an economic potential crisis here, if it isn't already. And when we're looking at this stuff, Andy, things can still be potentially getting worse, but maybe there could be some fatigue on the social media front in terms of people focusing and talking about it. Are you seeing any of that yet? I don't know if we have Andy. I'm not hearing him.
There's a new normal that's going on.
So it looks like we got him now.
Yeah, new normal. And people are talking about these things less and less. They're also talking about them in different ways that's very difficult to track. So now people will just say the word this or, this situation, which we can't really track. The mentions are down because this is a new normal. This is now the topic of conversation, and there's really not that much new to say on a day-to-day basis. I think that investors and the general public is getting very used to the quarantine. They're getting used to hearing about threats about the virus. They're getting used to unemployment numbers and scary numbers coming out. So there's not a whole lot there that's new to talk about. In fact, there's a little bit of desire brewing to hear some hopeful messages, I think, and to get more positive in our messaging. I think that could do us all some good. And we're starting to see that come through in investor attitudes and consumer attitudes.
Andy, I have a quick question. We were just discussing the E-mini 1 day, 1 minute chart, right? Kind of a real running tab of how this goes. As you know, there's a press conference, later in the day, each day, where the Trump administration gets on. They cover one from the New York area. Do you find that there's a surge of social media reactions at, during, and after these conferences each day as they summarize them? Is there any like 1 day, 1 minute increase in volume when these daily news conferences happen?
Yeah, there's absolutely a surge. It's kind of, you think about the way time has compressed. I think See the Light Trading is one of my favorite Twitter follows. And this morning he said, we're getting 6-month market moves in the course of 24 hours. And time is just compressed to a point where now we're getting the equivalent of a Federal Reserve Open Market Committee statement every day from the administration. And so the reactions to those things are enormous. There's a lot of attention on those. They do move markets. They do change at least investor attitudes about the market. When we look at the LikeFolio Fear Index, that shows how much people are concerned, talking about, the stock market tanking, their fears, and that sort of thing around investments. And when we look at that over the course of March, you can see specifically when things started falling apart and people started getting very scared about this virus. But you can also see that this past week has seen a massive drop in the level of fear. And part of that's because the markets were up a considerable amount, but part of that's also because this is kind of the new normal. It's less scary once you've been seeing these volatile moves for 3 weeks than it was at the beginning. And so, for now, we see some complacency. I'm not sure if that carries over. I think we're always one really bad news cycle or really bad market reaction away from a re-sparking of fears. But for now, people are starting to get used to this range in equities and the way that things are trading.
I love that you make that connection, because that was going to be what I asked you, Andy, in terms of we've watched how closely your fear index has tracked the VIX. The VIX, however, is going to be looking more at those implied moves or what the implied potential movement for the SPX is going to be over the next 30 days or so, and then it's annualized out. But your fear index is going to kind of reflect more of people's familiarity or acceptance of where that volatility is. And so to see that really kind of crater over the last week or so, a lot of it probably is to do with the 3 days in a row into the green, to your point. But if there's a little bit of normalcy or complacency with these and acceptance of these massive historical swings back and forth, I don't know if that's good or bad. I don't know if you guys have a feeling on that. One thing's for sure, though, is it maybe is going to take a little bit of that panic out of the market one way or another. But like you said, things can change in an instant and can change on a dime if there's some type of negative headline that comes out.
Yeah, no, I think you hit the nail on the head there. It takes the possibility of panic and it requires a larger move for people to panic. When we see the fear index get to these levels and drop, even though you've got volatility where it is and implied volatility where it is, like you talked about, I have no doubt that if Monday morning the stock market opens 4% lower, we will not see individual investors and your normal investor freaking out like they would have 4 months ago. It's the new normal. And so they're not going to panic sell, and you have less of the fear of this kind of cascading panic that may ripple through markets, which I think is good. Whether the complacency long-term is good or not is another story. But I think in terms of the short-term kind of domino effect of prices moving lower, causing panic, causing prices to move lower, I think that threat has already occurred. That move from Dow 29,000 or whatever it was down to 19,000. That was a lot of that. I don't think that we're going to see that very much moving forward unless it's a really record-setting type of day.
Yeah, Andy, I got tons and tons of questions here, but I want to make sure Kevin gets a chance. Kevin, any comments or questions on the thoughts around what Andy's talking about here?
Yeah, I just think you should never underestimate American investors' ability to understand diminishing returns in news, right? And if the news keeps coming, you start judging, well, that's not as bad as I thought. I thought some of the comments from the administration yesterday, Dr. Birx, I think this woman is doing an unbelievable job of cutting through some of the noise that the media can't help but promote. And I thought she did a great job yesterday of doing exactly what Andy said. People's fears are starting to trend downward. I think they peaked, and I think you're seeing that. Now, that doesn't mean that, based on percentage movers, this market's the VIX is gonna stay elevated, but there may not be a fear level in that index, in that VIX, as much as it's just a acknowledgement of the new world we live in.
Yeah, and Andy, real quick, I got a question building on that. Are you at LikeFolio? Obviously, you're following trends. You're trying to find potential winners, potential losers out there in the market in terms of areas that there's potential opportunity. Do you look to these macro trends and say there could be opportunity one way or another in more of the macro trades, whether that's in the bond market specifically or in the S&P specifically, or are you guys primarily still company specifically focused?
Still company specific focus, still equities focus for sure. But I do think that there's baskets of opportunity that are definitely, impacting more than one stock. I think when you think about the number of, we're doing this show, you guys are remote. I know that a lot of the company that you work for, if not all of it, is remote. Those type of trends, and you think we've talked about it before, the acceleration of that adoption curve and what industries or sectors are benefiting from the acceleration of that adoption curve. There's more than one stock in each of those. And I think that there are baskets that you can put together and say, all right, home renovations are up in a big way because people are stuck at home and they finally have run out of shows on Netflix, and now they're actually going to fix what's wrong in their kitchen or paint that room that's been bugging them. Remote work, I think, is an obvious one. Streaming services. There's a lot of things, a lot of companies that are in positions to capture a large audience of potential repeat customers that will last them for years to come because of this, because of what's going on right now. And so we do think of things equity-based, but there are baskets of opportunity. There's opportunity to be diversified within those sectors that are seeing opportunity. And so that's the way that we look at it. And really, like Kevin's talked about a million times, we're building these shopping lists, and we're thinking about, when the market puts everything on sale, what do I want to be ready to buy? What do I want to be ready to dip my toes into? I'm not necessarily going to chase things when we're up 7 or 8% on a day, but on other days when the market puts everything on sale and the baby goes out with the bathwater, let's figure out where we want to be looking first.